Welcome everybody to this Blackwell global video on the chasing returns tool, the money ball of trading. We will give you an overview of the tool of chasing returns and what it actually can do to help you find your unique edge in trading and help you hopefully to minimize the losses you incur. Before we go into the topic, just really quick, the risk disclaimer. Trading CFDs can result in the loss of your capital. If you have any questions about that, please don't hesitate to reach out to the account representatives at Blackwell Global. We'll be very happy to help you with that. So with no further ado, let's now go into the topic. My name is Malte Kaup. I'm the founder of a Traders Leadership Council, and this video is a great opportunity for me also to give an independent opinion on the most challenging trading topics. And it's a great privilege today to have a CEO of Chasing Returns here on the line, Anne Hunt, and she with her team has set up a really cool tool which will be quite a game changer for Blackwell Global customers who wish to use that tool. Anne, are you here with me?
Yes. Hi, Malte. How are you?
Fantastic. Thanks for joining us. And the reason why NECR is on the line is that I will give you a bit of a look and a feel what the topic is we want to discuss today and what kind of challenges chasing returns addresses, and who else than the founder of the company and the CEO of the company herself could guide you then through the actual tool and give you an idea and how it works. So let me just to frame the conversation, just a couple of pointers. What is really hard about trading, especially when you for many retail traders who trade CFDs. So what typically happens quite a lot is that when you look at a large number of trades, and this example 201, so not too many, but a fair number of trades, we have a pretty kind of bulky middle in terms of our trading performance. In this case, about 90% make up a middle range of a trade performance. We have a small element of top trades, the ones we really go after, and we chase the returns through those trades. But the ones we hate are the ones that typically cost us all of our performance, which are the bottom 5%, which often generate the disproportionate losers. That in this case actually have a fairly mild impact, but in many cases substantially reduce or even wipe out trading accounts. I've seen that time over time again. So why does that happen? So first of all, we lose too often in trading, and in my experience, that is a problem. But that's not the biggest problem. The biggest problem is we lose too much. We completely mess up our risk-reward ratio. So we often see that with traders that for days, for weeks, for months, for quarters, for years even, they show a slightly positive performance. But then it can happen really in a Friday afternoon after NFP that all that performance is gone because traders get a bit cocky, right? And they maybe have a first loser and add to the second position and the third position, and suddenly they have a massive loser on their hands. And then exactly what you try to depict here on the bottom here happens is we lose too much, and then the trading account can be destroyed. So I've seen that over and over again. So you set yourself a target, but what do you deliver? And I think the more experienced traders watching this video, that probably resonate. You've probably been there. Everybody in trading has probably gone through that experience curve. And just to frame a little bit what we're going to be talking about, and I think the Chasing Returns tool does a fantastic job at visualizing your individual performance with some complete breakthrough new statistics and some KPIs most traders should be familiar with. So one thing we will be talking about quite a lot is the batting average, and the other one is the risk reward. Batting average, very simply said, is when you look at 100 trades, how many out of these 100 trades are winning trades versus how many out of these 100 trades are losing trades. And in this example, 50%, that would represent 50 winners versus 50 losing trades. Risk reward ratio, well, we look at if you have a winning trade in comparison to a losing trade, how big is the winner versus the loser? So if that's 1 to 1, well, you expect that every winner is equal size to every loser trade. And as you can imagine, when you look at 50% batting average and one-to-one risk-reward ratio. That is a trading strategy that in a theory demo world would exactly yield a flat line, right? You would not generate any profit or any losses. In reality, as we all know, you would slightly decrease your equity. Why? Because at the end of the day, you have to pay transaction costs to deal with a broker, right? So in most cases, that's just the spread. It depends on what kind of financial instrument you trade. That can also include commission. But you will probably over time just melt away your equity. And just real quick, let's have a look at kind of the two different ends of the spectrum here. One would be a trading strategy where we have a very low betting average, right? So we only have 20% or 30% of betting average, which means we lose quite a lot. Out of 10 trades, only 3 are winners and 7 are losers. But the risk reward is higher here in this case, that every winner is double the size of a loser. Quite frankly, from a psychological standpoint, really hard to trade for many traders. Why? Because you just lose a lot, and we don't like to lose, right? And then on the other side, you have to be patient and follow through with the winners to make sure that you capture the few rare winners. And in this case, I'd say that you probably, if you are a trend following strategy, somebody who has a trend following strategy, you probably want to go for a higher risk reward ratio to be successful. But it's just so unbelievably hard because you get stopped out all the time. And finally, and that's probably something that we see quite a lot in the CFD retail trading community, people love the close to 100% batting average, and they're very happy to sacrifice their risk reward. As soon the trade transfers or translates into a positive trade, just a couple of pips, boom, it gets closed, but we let the loser run, right? And I think zero point 0.5 in that context is already a very mild outcome. What I've seen is actually in many cases much more devastating for the trading account. Just to again give you some ideas, kind of what are the different betting averages and what are the different risk rewards, what kind of strategies do we see, and just to define pretty much the terms. And before we just go on the platform, and I will pretty much hand it over to Anne and ask a couple of questions as we go along. Just to confirm that what happens in trading quite a lot is that you start trading, you have a suspicion that maybe you're not really the best trader on the planet, and suddenly you go into this drawdown phase, and weirdly enough, it confirms your suspicion that you're a bad trader, and you go through this loss aversion phase. But what many people then do is they add to the losing trades, they get into these losing streaks, and then they generate these disproportionate losers that kill our trading accounts is essentially. And I think Anne and her team at Chasing Returns have done an amazing job at picking up exactly this challenge and creating a revolutionary tool that finally kind of levels the playing field between professional traders and retail traders, or even more so, I think also I've heard that a lot of professional traders are kind of licking their fingers or looking at the additional analysis that is available through Chasing Returns. So let me switch over to the platform. And maybe Andy, if you could just give us a little bit of idea, why did you come up with Chasing Returns? And please use me and navigate me, use me as your navigator through a platform.
I'll do that. Thank you, Malte. So, I suppose my story is kind of interesting because I spent 10 years on Wall Street, and a lot of it was building technology for professional traders. And it's sort of 5 years ago when I decided to start trading for myself, the first thing was I was kind of shocked that there was no tools out there. And the second thing was that I really felt I would be different because I had all the training, I had spent a lot of time around traders, but I actually fell foul of all of the same problems that people have, which is I opened an account, I managed to double it, and then I gave it all away. And I really started to get more interested in the whole concept of trading psychology. And so basically out of that came the ideas for building the Chasing Returns platform. So what I'm going to do is there's 3 different parts to this. We're going to have a quick look at this particular trader, who we have a year's worth of data for him for 2016. And this is a professional trader who did about 2,000 trades over the year and made about $2,000. And the reason this trader is interesting is because A, he's quite successful, but B, like the rest of us, he has quite a lot of times where he's quite unsuccessful. And what I'm going to try and do with this demo is show you the combination of what are the traits that are making him trade well and what are the traits that are going to make him trade badly. Okay, so let's really quickly, we're looking at the dashboard, which is the first introduction to chasing returns. So the very first thing you see is the fact that he did 2,000 trades, and you can see what products he traded there on the portfolio breakdown, right? If you scroll down a little bit, you get to see, and the first thing people should look for is it the middle 90% of my trades, or is it something about what we call our outliers, the top 5% or the bottom 5%? So here we can see that actually this trader does really well 90% of the time, and we can see that actually his worst 5%, they don't make up for his best 5%, but he's not actually doing too badly. So he does have an issue that his worst trades are, much bigger than his best trades, but overall it's not enough to cause him overall losses. And right down at the end, we can just have a quick visual look at his top 3 and bottom 3. You can see that his worst 3 are slightly bigger trades overall, and they're bigger losses than his best 3 trades. But overall, quite a balanced account in terms of where he's at, and we know that he's profitable. And if you scroll right back up to the top, but we're just going to go across and show you. So the first thing we see is that he made roughly $200,000. So if we look at his total P&L, so I just select there. Don't hit the I button because you've just brought up the online help. So one of the things we have on the platform is full integrated help. But here we can see there's his P&L over the year. Even the best traders have down months, and he in February lost about 50K, and again in August he lost about 30K. So that's the vagaries of the markets. It swings and roundabouts, but he clearly was able to get himself out of that and go back to successful trading. And then what we show very simply across the top is the average P&L. So if you just go right across. So just what is my average trade making? So this is kind of a marker to look at how close am I to break even. So he makes roughly, I'm going to round up and say he makes $100 per trade, right? Which we'll use a lot more later on in the demo. And then if we look at his win rate or batting average, he actually makes over 50% all of the time. So that's a really good rate for him. He's fairly consistent over all the months, and he's winning more than he's losing, which is very positive. The risk reward, however, as Malte made reference to, is actually only 0.61. So this means for every winning trade of $60, his losing trades are actually 100. Okay, so there's only 1 month where actually his winners were bigger than his losers. So as I said, it's the combination that make up the profitability. But again, his risk reward ratio is not that high, and it's something he could work on. And then the final piece over on the side called disposition. So this is the first of our psychological metrics. This is looking at how much time is he spending in winners compared to losers. And he's spending 1.1, which means the length. If you look at this particular one, the average time in winners in November was 1.9 days, and the average time in losers was actually 16 hours or 1.4 days. So he can stay in his winners slightly longer than his losers. That this is a really important metric for people to measure. If it's less than 1, you're probably either staying in losers for too long or cutting winners too quickly. And again, we'll make a bunch of references to that further on in the demo. Okay, so that was a quick overview of the dashboard, and really what the dashboard is there to do is let you just get a helicopter view of your trades. You can see at the top that we're looking at the whole trades, but you may want to move the calendar around. You may want to look at your last 6 months, your last month, your last day, your last week, etc. So it lets you move around and pick an area you want to look at, or put in custom dates if you like. All right. But for this demo, we're going to stick with all. Your first view on the platform, what you do is you load up all of your historical data, and you're really trying to get an overall view of your behavior. So Malte, let's go to the game plan, which is the second application. And what we're going to do now is, now that we know what this trader's metrics are, we're going to try and look for what we call trading edge, right? And we have 3 categories of edge in here at the minute, and we have a 4th one coming. The first one is strategy. So if you click on that, you'll see some options underneath. And this is really simply looking at, if we go back to the 2000 trades multi on the top, we're looking at long versus short trades, okay? So the very first thing we can see is he's roughly 50-50. He trades slightly more short trades than long, okay? Which you can see on that chart. But when we look at the P&L, interestingly, this is the first edge we see. So this trader is a really profitable long trader, and he actually loses money on his short trades, right? And so he did 1,000 trades there that were short, roughly, and they're losing trades for him, okay? And let me show you how to use this information. So if you go to average P&L, okay, so this is a color coding system that Chasing Returns use. So we have mathematical calculations going on in the background. So there's a bunch of statistical models. And what we do is we try and analyze whether or not we think there's a significant habit. And if you see a dark purple color, that means it's some kind of positive habit for you. So whatever this trader is doing, his behavior when he trades long is different from the behavior when he trades short, right? And if you just mouse over the long bar to get some information. So first of all, by just mousing over, you get to see, his average overall is $85, but on his long trades, it actually goes above $200 per trade, okay? And there's a whole bunch of interesting information there, because what we try and help with is, where are the outliers? Are they sitting some in one side versus the other? In this particular case, they're not. It's nothing about the outliers. It's about 5% in each. But we do know that this habit is 99% reliable. So he really, really clearly trades better when he's trading long, right? And we do this. We calculate a number. We call it inferred P&L. And this is how, as a trader, you try and understand how much is a particular habit costing you. So we say, if this behavior for long trades applied to his entire history, what would his P&L have been? And in this case, you can see it would nearly have been 500K. So more than twice his P&L he would have made if his short trades were able to deliver the same returns as his long trades. And if you go over to the short side, you'll see the opposite. You'll see that he loses on these trades, €40 per trade. The inferred P&L in this particular case is almost 100K of a loss. And that's saying if this behavior is how he traded all the time, that's how much money he would have lost.
I think that's an amazing level of visibility we get, and I think I've probably never seen that in a tool, especially when you talk about the inferred P&L. It's probably also interesting for traders, and that is the question I have for you, Anne. What do you see often when traders see this kind of data? Do they try then, in this case, trader clearly has problems with short trades. Do they try to improve their performance with the short trades in that case, or would they try to eliminate short trades from their portfolio? What kind of reactions have you seen to that data?
So the reactions kind of follow a pattern. So the first thing is, when somebody sees what we call an edge, they're never surprised. So they typically, even if when we say, and some of the more deeper metrics we see later on, people are not surprised that they have a weakness. What really surprises them is what it costs them in terms of lost P&L or money given back to the market. And in terms of what we recommend to people is, you should never not trade, right? Because you're never going to improve if you stop trading. But immediately you can be really smart about your money management. So in this particular case, the clear message is you should be putting bigger position size on your long trades and smaller position size on your short trades. And the very same trades will suddenly return a lot better for you, because you're putting your biggest bets on your highest probability outcomes. And that is the key message we like to give to traders. It's always take your signal, make the trade, but until you're able to adjust for whatever is causing the problem, just use money management as a really fast way to stop giving money back to the market. And we'll talk a bit more about that when we look at some of the psychological metrics, where they're not that easy to fix sometimes. Mm-hmm. Yeah. And I'm going to go into a little bit more detail on long short just to explain the platform, and then we can be a little bit faster on the rest. But for this trader, if we want to know what's going on, we would go to the win rate and we'd have a look at that, right? And here we can see actually it's almost the same. So he's actually hitting the same number of winners, give or take, in both long and short trading. So that isn't where things are changing for him. So let's now look at the risk reward. Okay, so here we can see it's quite significantly different. So his long trades, he's getting 0.7 or 70% the size of his losers. And his short trades, it's down just under 0.55. So there's quite a significant difference there in the way his risk reward returns for him on long versus short. And that's really where he needs to focus, right? And let's look at disposition, which is where, his mental state comes in. Now, this one is really interesting because clearly he's able to hold his long winners, almost twice as long as the losers. But in his short trading, you can see that he's really underperforming. So he obviously lacks confidence trading short. He's not able to hold that. His disposition is failing, so that the time in the winners is a lot less than the time in losers for short trading. And it's fallen below 1, which is not a good sign on the short side. And again, chasing returns doesn't try and tell him how to fix it, because most people need to look inside themselves as to why they have certain behaviors. But this gives you the first place to look. And using inferred P&L helps you figure out which habits are costing you the most.
Yeah,
So as an
it's
example,
something different, right? When you first you have a suspicion, and when you see it right in front of you, and you confirm that suspicion with some hard facts and data. And I was working with a lot of students in trading together. I think that's always what they need to improve their performance, to see it black and white, and not just to feel it. I think that's an amazing level of visibility that I've never seen before.
yeah. That's what we're trying to achieve. So do you want to move on to product then?
Sure.
Um, and we'll start with the trades entered again, just briefly. Go back to the first card on the left, 2,187. So again, this is the way to see what products is he trading and how much is he trading them. So in this case, he's trading a quarter of euro dollar. So if you want to kind of understand how many products you're trading. And then if we look at the P&L, and we're not going to try looking at all the metrics, but here, a really simple visual. And actually, if there's a lot of products, you can zoom in. So if you put the mouse anywhere on that chart, you can do a little zoom. If somebody's trading a lot of products, you may want to zoom in on it. But here you can really see which which products are profitable and which ones are not. Okay, really, really simple. If you go to average P&L, this is where it gets really interesting. Okay, so the first thing we see is there's lots of gray bars, and they're actually quite big. So in chasing returns, if you get a gray bar, it's giving you the data, but we don't feel it's statistically significant. So a lot of those products on the right, he doesn't trade very much of, and some of them are profitable and some are not, but we don't feel there's enough data there to tell you it's useful information. So if you zoom in on some of those smaller bars that are purple and orange, multi, for example. So here, these are significant. So you can see that certain products he's much stronger at and certain products he's much weaker at. Okay. And again, it's worth, it can be lots of different reasons. Some products are more volatile. Some products we just know better. Some products we're more comfortable with. We're not trying to second guess why, but you look at the data and you try and figure out what's going on for you as a trader. Okay, so move on to trade duration. I think we'll just stick with average P&L and just kind of tell the story, because I want to get onto the psychological edges where some of the most interesting observations are. So on trade duration, we're looking at how long is he spending in the trades. And we can see this actually is quite a healthy chart, because we can see that the really shorter durations are underperforming and the longer durations are overperforming. Now, that's actually what you want to see. You want to see your stops kicking in and the losers getting out early, and then you want to see it improving the longer you're held in positions. And here we see that his best trading is done on positions that are actually held for longer than two days in this case. Now, this actually tunes itself. So if you're a day trader, this may be in hours and minutes. It works for any duration. Mm-hmm. Okay. Right. Skip my tags and we'll come back to it. Go on to timing edges, which is here. And we'll just briefly have a look at those. So entry time of day, very classic very classic behavior. So this is a professional trader, and interestingly, he's got no edge when you just look across the day. So he does not do so well in the morning, but it's not reliable in terms of data. So even though there's 500 trades done before 7:30 in the morning, our analytics are telling us that is coincidental, and there is not enough information to say it's actually a habit for him. Whereas if you go into the hour view, so do you see where quartiles is? Yeah, if you go into the hour view, and it gets into a bit more of the weeds of his trading, I think we will see that there are some nuggets of really good information in here. So particularly if you look at that 7 p.m. slot, so he has a very negative set of behavior there, and he's losing. You can see quite big losses. The average P&L loss there is 700. So a lot of his outliers are popping in there. So clearly this is a time of day where he's trying too hard, he's got big size on, and they're not necessarily working for him. And then as the market close comes around, this would be 9 p.m., so this would be the New York close. He can do better, right? So, and there's some hints in here that he's trying to get positions on for the close, and he's putting them on quite early, and they're not working out for him. And I'll explain that to you a bit more when we look at, maybe if we go on to the next one, which is entry day of week, right? So for entry day of week, would you just show the total P&L first, Malte? Because this is a really interesting chart. Okay, so if you mouse over, we'll start with Sunday, because he loses a lot of money on Sundays. Okay, so the first thing to note here, which is really significant, is he only did 92 trades, right? So 4% of that entire year of trades was done on Sundays, but yet it lost him $50,000, right? So not a lot of trades, but a huge amount of losses. And you can see a lot of his outliers were on Sunday nights. And again, this was, and I'm making reference to this because we saw it on the previous chart. He's trying to get in early for the week, and he's very eager on a Sunday night, and it's costing him a lot of money, right? And the other anomaly in here is Thursdays. Now, I know this trader. Thursdays is the day he told his wife he was going to mind the kids. And so he trades from home when he's not actually in the office, which is very, very common. When we show charts to people and we go, what is going on, on a certain day or a certain time? They're like, oh yeah, I'm supposed to be, doing something else at that time or whatever else. So clearly he's not focused on Thursdays. He's not in his office. He's trading from home, and he loses money on Thursdays. Yeah. Right. Now, to see the impact, if you go to average P&L then and just look at it per trade level, right? Even though, so the Sunday nights he lost 50 grand, but you can see it's because he's taken really big size. So the average losses on Sundays are really significantly lower than his overall average, right? He's losing 600 per trade. And also it's the deepest orange, which means it is the worst habit. It is very statistically different. So huge opportunity for him to, he doesn't do that anymore. He doesn't trade on Sundays. Okay, so now we're going to go to psychological edges. I'm skipping a few because there's quite a lot to go through, but this is kind of in keeping. So if you go to trade sequence and start on the left with how many trades, so the trade entered card. So the trade sequence is looking at your first trade of the day, your second, third, fourth, etc. It's looking to see, does something happen to your performance as you trade throughout the day? Okay, so this guy trades up to about 40 trades in some days, and you can see the distribution there. So the first trade of the day, there's only one every day, so there's about 200 of those, and then you can see there's about 400 everywhere else. So let's go look at the P&L now and see if there's any kind of pattern. Now, this is very interesting because we can see his first trades of the day lose him money. And if you just mouse over that, first trades. Okay, so this blew his mind, right? 10% roughly of his trades, they lost $250,000, right? So by the time his first trade is over, he's got that much money to make back if you look at it over an entire year. So again, he just has this particular, psychological habit of he can't wait to get into the market, whether it's getting in early on a Sunday, getting in a bit before the close, getting in first trade of the day. That is a consistent theme that we can see in his trading. And then the rest of the trades are obviously making it up. But to make back that 250K, the rest of the book has to make 400,000, right, just to get to his P&L of 200, actually nearly 500,000. So if you look at average P&L, just to kind of reinforce that point, so he's actually pretty even once he gets those first trades over, right? But this is showing reliability of 99%. This is absolutely a problem for this trader. And now he makes, and again, just coming back to your point, Walter, you can't not take your first trade of the day, but you can make it tiny, tiny, tiny while you work on the problem, right, of your discipline and making sure it's the right trade and you're not just overeager to get back into the market, which is what's happening to him.
Yeah, and it adds up, right? So if the trader stops trading on Sundays and on Thursdays, either goes to the office or doesn't trade,
Yeah.
plus reduces his position size for the first trade, he can massively improve his edge.
Massively. And if you put a mouse over that first trade again, so he trades so badly that the inferred P&L, if he actually traded like that for the 2,000 trades, check out that inferred P&L. It's minus 2 million,
Wow.
right? So now he's not going to have that bad behavior all the time, but he's capable of that kind of lack of discipline, which means it's a worry for him and it needs to be dealt with. So he needs to know when he's in that situation, when he's emotionally at risk of trading like that. And that's what the platform is trying to show you. So first trade of the day, really, really, that's the most key thing for him there, right? So we're just going to go through some of the other psychological ones. In this particular account, some of them are let's stick with average P&L and let's go to time between trades. I just want to explain to everybody what it is. So what time between trades is doing is it's saying, when you get out of a position, how long do you wait to jump back into the market? Okay. Gray is good. Actually, if you click on swing, because he's a swing trader, we've got intraday if your trades all reset at the end of the day, and we have swing trades if they don't. And so what this is telling us that actually, apart from a positive edge, where if he's out of a trade, about 40 minutes to 4 hours, he actually shows a strong positive habit. But actually, for this trader, there's not a lot going on here. And every trader will find this. Some of these screens will really talk to you, and some of them you won't have an issue with. And your goal is to be gray in every chart, in every psychological edge. You would like to act like a robot and not show edge. And in this case, it's not actually too bad. He's no negative habits, and there's a particular strength there, which I don't actually understand for him. As in, I can't explain why it is, but it does exist for him. So maybe it's after he takes a break, maybe it's the time of day, but there is a positive edge there, right? So let's look at winning streaks now and losing streaks. There's some interesting stuff in here. Winning streaks are very interesting because they can go lots of different ways for people, right? And this is quite a common chart, or we call them psychographs. This is quite a common psychological profile for a professional trader, and actually it's not that common for a retail trader. So it's kind of a maturity measure of yourself, because what you see is some traders, when they start to close winners, they get into a zone and they can continue that kind of performance. Whereas other traders may have 2 or 3 winners and then really start to give money back to the market, right? So in this particular case, winning gives him a bit of confidence, makes him feel good. And as winning streaks happen, those next trades he enters typically start to do better. So in this particular example, so number 4 is the most purple bar. So that's saying when he's closed 4 winners in a row, and we look at the next trade he enters, they perform really successfully for him, right? The average goes up. He's probably putting more size on, he's building in confidence, but he's making good decisions and winning streaks, right? And let's look at losing streaks now, because it's kind of different for him, actually. Because what's happening to him in losing streaks is he actually loses confidence, right? So, and we can see 2, 3, not so much, but 4 particularly. So when he's closed his 4th loser in a row, those next trades that he puts on are not put on very well. They're losing him a lot of money, right? And we can see it doesn't happen that much. Again, it happened 3% of the time, but the inferred P&L is quite big. So they cost him quite a bit of money. And we can look at the P&L to see what it's really costing him, but you can see the lack of discipline starts to kick in. And it's this is the loss aversion we talked about earlier. He suffers from it, and he starts to feel losses. And when they're close to in memory to him, because he's just closed four in a row, we can see they're losing him money.
Right.
Yeah. Okay. And then there's just one more piece I want to show. If you go to the navigator on the bottom, and actually, if you pick the 6 month time frame, it just happens to be a better example. Obviously, you can look at any particular time frame once there's enough data there. But because we've so many different ways we look at the data, we put in this navigator to help you figure out where do you start. So what this is doing is it's taking the inferred P&L and it's telling you what are your best three and what are your worst three. Okay, so it's kind of a recap. So when we look at this trader, the best edge he has is trading euro sterling. Right? And we can see it's the deepest purple on the top, and the inferred P&L is about 800K. So whatever he's doing trading that product, if he was able to make that happen all of the time with no psychological impact, he would have made 800K, right? And then if you go all the way down to the bottom one, which is that first trade of the day, we can see if that type of discipline existed for him all of the time, his inferred P&L in the last 6 months would have been minus 1.4 million. Okay, so this is a great way. Once you get familiar with the metrics and you see your edge and you don't know where to start, the best thing to do is start with a navigator, because it helps you put priority on on what you want to do. So that's kind of a whistle stop tour of the game plan. I'm just going to briefly show you the third app, Malte, which is the trade log. Sorry, the journal. Yeah, the journal. We're constantly changing our names. That's just one of the help screens popping up. We're just finalizing product names at the minute. So, and maybe one day is a better example to show. Basically, what the trade journal is a full list of all the trades, which you can see from any bar. So if you click on any bar, you're able to look at the trades and make up that bar. But what I want to show you here really briefly is we've introduced this concept of tagging, which is there may be something you want to track about your trade. So it might be you're running two different strategies and you want to differentiate them, or it may even be that you want to start tracking your emotional state. So, you may put in, we've got traders who track when they've been out drinking the night before, or when they had a fight with their girlfriend, and we've got all sorts of crazy things when they didn't go to the gym. But really, the idea of tagging is you may have a system that you want to track against your trades. So what you can do is you can tag them in here. And once you get enough of your trades tagged, we actually show you that as an edge. So you may have, if you're running three strategies, A, B, and C, we can go in and have a look, and we'll show you that A is overperforming and B is less and C is less. And again, you still might want to run three strategies, but you can put more money on the more successful ones and use that to tune how much profitability you can take out of the market. So you just hit save when you've tagged them. And it's not actually going to work on this demo, but if you go into game plan strategy, because there isn't enough data in there now, there's a my tags that we didn't look at under strategy edges, just to show you there. So yeah, so if you invest some time in tracking and tagging your own trades, this will show you whether or not. Okay, so there's a tiny bit of information in there. Clearly, it's grey, because if you make data up in this platform, you'll get grey because there's no significance. But if you do that over time, you may start to see habits coming out, or you may start to see positive and negative edge.
I'm amazed that he found my drinks tag already. So one on the right is drinks and scalp and long swing. That's great. I think these are the three tags that I came up with, right? And that's probably why it populated now the three bars.
Yes, absolutely. And they
one.
have no color because there's only a couple of trades in each.
Yeah.
So you would want a significant pattern of behavior before you would see that turning purple. So you'll have to drink a lot of beer before you know if it's a good or a bad habit.
That's interesting. If I find a positive correlation there, I owe you some. But I find it really amazing. Thank you very much for that. And I think one of the things I find striking, and then I have actually one more question for you, is that with with this powerful tool, with just some little changes in a trading strategy or in execution of a trading strategy, one can have like a really powerful impact on the edge and on the potential outcome. Just with one question, probably many traders now ask themselves like, A, how can I get my hands on this? But B, more importantly for them probably, as they expect this will be provided through Blackwell Global, um, somehow. Can I connect an MT4 or can I use my trading data that I have in an Excel file? And how do I get that stuff connected to chasing returns?
Yes. So with Blackwell, what happens when you register? You give the name of your broker. So if you're an MT4 client, we'll ask you to download an expert advisor.
Hmm.
So it takes about 3 minutes and the instructions are on the site. So you download the EA, you put it on your MT4 machine and you connect into Chasing Returns. And then once that EA is running, your data will be sent over to Chasing Returns. And anytime you come to the platform, it takes about a minute for the data to get there.
Fantastic. So there's no other intervention needed that happens then in the background.
Correct, correct. If your data is on a spreadsheet, we have custom spreadsheets for pulling historical data in also.
Brilliant. And I've seen also the link with the support, and I know that the Blackwell people are probably also quite well trained to at least capture the questions and make sure that the most pertinent questions are getting answered. So there's no shortage in terms of support and knowledge. That's great.
No, absolutely. And see the little box down on the bottom right? If you
Yeah.
just click on, so it's not a 24/7 service, but you can ask any question there. Who's on call right now? Yulia's on call right now. And so that will either come to Chasing Returns or will come to Blackwell, but somebody will respond to you with any query.
Fantastic. And with Julia,
And
you
go.
would have a brilliant support. I know she's a fantastic data scientist. What else do you want me to show?
I just wanted to just point out the little I buttons. So there is a wiki, and so if you're not sure what the metric is or what it does, um, you can go over to the help, and it'll give you a little description, and there's little videos and little tours around the platform. So to get you up and going, you can follow those.
Yeah, I think that's the page that opened when I accidentally clicked on VI in the beginning. So you get
Yes,
a really in-depth description and easy to understand description, including a video even of how to
yes,
use the dashboard total P&L section.
yeah,
Fantastic. So, hey, and thank you very much. Let me just bring it together. Try to make the case that trading is hard, especially the psychological components in trading are really difficult, and people struggle to execute trading strategies effectively and to understand where they do have an edge or where they have some room for improvement. And what chasing returns in a very simple way does, it connects to your trading data automatically if you use MetaTrader for in a couple of minutes, and then you can see all these additional dimensions, which sometimes probably only result in some little modifications, but with some disproportionate impact on your trading strategy. So really powerful stuff. And thanks for coming on. And I'm sure we will continue to update you guys on the newest developments on chasing returns as soon as they become available. Thank you very much.